Hey, what's up? Good morning, everyone. It is Friday, Capital Preservation Friday. Capital Preservation Friday, the 15th, November the 15th, and today it's also OPEX. It's a monthly OPEX week, so this week, not the best of movement necessarily. It's been more of a fight. It's been pretty solid, but since it's Capital Preservation Friday and OPEX, right? I won't be streaming today. I really don't. I'm probably not really going to trade that much. Maybe like one trade throughout the day, if that. Something really juicy has to kind of appear. And we got some decent downside that transpired not only overnight but throughout the end of yesterday's session, right? Finally, these guys pulled prices back. Kind of what we were leaning towards over the last few days, a little more bearish movement and bearish price action based on how the continued selling arose. Now, a lot of this might be in part, well, a lot of this might be due, like a lot of people are looking at this. The logical aspect of this is that yesterday Jerome Powell came on the mic at 3 p.m. Eastern, right before the market closed, and surprisingly, that's kind of when we started to see this dip. So Jerome Powell said that economic conditions do not warrant a quick pace in lowering interest rates, and the remarks followed the early Thursday release of producer price index data for October. We saw the CPI before that on Wednesday, and the PPI second consecutive inflation report showing that prices holding firmly, albeit as expected. The economy is not sending any signals that we need to hurry to lower rates, said Jerome Powell in a prepared remarks for an event hosted in part by the Dallas Federal Reserve. With that, the S&P closed down 0.6%, the Nasdaq 0.6%, the Dow Jones 0.5%, and the loss was the second in a row for the S&P and the Nasdaq as Wednesday's session snapped their win streak. That was launched after the U.S. elections last week. Now, it's a obvious, well, I guess it's like an obvious market reaction as to how these things kind of transpire because realistically, the Fed started cutting 50 basis points the first chance they got, then they moved it down to 25 bips, and now all of a sudden Powell is taking the foot off the gas. And what we're seeing is, oh, we're not in a hurry anymore. We're not in a hurry. Well, he sees the markets kind of not needing these kind of rate cuts, and I think that and a lot of people think that it was probably a preemptive mistake of him cutting those 50 bips, and now obviously the market reacts adversely. Now it's nothing to be like, oh, crash incoming, crash incoming. This dip probably gets bought up over the next week or so, but we are pulling back. We're finding better buying into lower prices, and that's what I'm going to be looking for into next week's session more so. I think this, to wrap things up here, is not necessarily... we can't have like wild whips up and down, but I don't think it's going to be like the best of trading conditions today. So I think like Capital Preservation Friday, right? Decrease the size, decrease the risk, and just play it safe. So Powell said that policymakers are confident inflation will move sustainably to their 2% goal with an appropriate recalibration of their policy stance and labor market strength, he said. But the journey to the goal is sometimes a bumpy path. So, yeah, shocking. Powell makes the case that December cuts may not be on the table as the economy is simply too strong to keep cutting rates at the current pace. While that is far from bearish, it does not necessarily help the risk to reward in the market, cautioning investors to take some money off the table, right? Logically so. On the shorter end of the Treasury curve, the two-year yield rose 5 basis points to 4.35% as prices fell. The 10-year Treasury yield was off less than 1 basis point at 4.43. So we also saw the PPI headlines yesterday. We saw both the headline and the core readings rose from the previous month. Headline PPI increased 0.2% month over month from September's upwardly revised 0.1% print. And we see that, generally speaking, the inflation is kind of holding out and sustaining. There have been slight upticks, and there are fears going into 2025 that with the continuation of these cuts, we're going to see that ramp up. Now, just in general, ramp up. So the S&P has climbed nearly 25% this year. The market surge this year was fun. However, it priced in a perfect scenario of consistent rate cuts and inflation decline to 2%. So odds of a December rate cut of 25 basis points dropped down to 62.4% from 70% earlier Thursday, according to the CME FedWatch tool. And also on Thursday, the weekly jobless claim surprised to the downside. So on the S&P 500, 9 of the 11 sectors fell. The industrials lagged all the others, down 1.7%, while energy and information tech rose. On the Dow Jones, Disney, right, up 6.5%, buckling overall downward pressure from the beating Q4 expectations. But a lot on the internal side, a lot of executives are selling big chunks of their shares. While retail is looking to get along, a lot of big money is selling at these all-time highs. Palantir CEO dumps a shitload after Palantir is up like 1 billion %. I think it's reached new all-time highs. So logically, it makes sense. Now, let's take a look at these equities, and we'll leave you for today, since it's OPEX, a day that I don't want to be very active or pushed to trade, if anything. Now, the S&P 500 yesterday, leading even into yesterday, we talked about this over the last week, the constant failure, right, especially above the 60-30s, presents in part, failure for the buy side to come in at these higher prices, which is fine, right? Like, we get this massive extension to the upside. Best case scenario is that we rotate and hold out some kind of balance before better buying comes in. Now, the case that we closed under that 59 mid 80 yesterday, that is really what opens up some of that bearish downside. We got the prior heaviness of volume intact as a resistance for the overnight, pretty much right off the open of the overnight session. We start falling from there. We've got this minor area over here. Now, things are very bearish. There's a very low volume region over here that's easily passed, like you can easily pass through it until we get down to 59.10s. 59.10s, 59.15s, those are going to be massive target areas for the sell side. Now, realistically, that's going to be the downside target for today. We do have some minor areas in between, but I would expect the mid-50s to low 60 on the S&P to try to hold that kind of resistance to push us down back into that mid-30, which is an area, as well as that 59, 15, 10 area. So might be a good thing that we're not going full stream this morning because, well, obviously OPEX, I think it's going to be choppier, but also construction here is about to go crazy. So I'll see you guys next week. Enjoy the weekend, and we'll chat very soon. Again, Capital Preservation Friday plus OPEX equals